So finally, we're going to take a look at the Statement of Stakeholders Equity and give some comments to help you prepare for the review problem at the end of the course. The Constructing Financial Statements videos for Rocky Mountain Catering will assist you in completing a set of financial statement assignments in this course and help prepare you for the review problem at the end of the course. We're following Rocky Mountain Catering from the formation of the firm, referred to as the initial condition, through the first year of operation. We'll use the information provided to construct a set of initial balance sheets, the company's first year income statement, a year-end balance sheet, cash flow statement, and Statement of Stakeholders Equity. So let's take a look at the Statement of Stakeholders Equity itself. So the Statement of Stakeholder Equity is actually relatively simple. It's a combination of elements from the balance sheet, the income statement, and the cash flow statement. It represents changes in owner's equity. So we get to see the change in equity value for the company's stakeholders. If the company's done well, their equity value should have gone up. If the company's done poorly, their equity value should have gone down. If the company's taken on new equity from investors, the equity value may have gone up. If the company has paid out dividends and distributions from equity to existing investors, then the equity value may have gone down. This is a simple statement. It's only got several lines on this document here in front of us, but in fact it's a terribly important statement. So let's take a look. So from the balance sheet, we look at the beginning equity balance. Well, the beginning equity balance is this $50,000 right here. And that's going to go on the statement right at the very top. From the income statement, we take a look at the net income or profit. And on the statement, it goes right where you'd expect it to, under net income. From the cash flow statement, we're going to take a look at additions or reductions to paid-in capital. That's the same thing as issuing stock to investors or buying stock back from investors. And then we're also going to look at dividends and distributions. So equity dividends, equity distributions we're giving to our equity stakeholders. Well, in this case, we don't have any additions or reductions of stock, and we didn't pay any distributions out to stakeholders. Had there been an issuance of stock, it would have been the company issuing stock to investors, in which case investors would have paid money to the company. That would have been an addition to cash. It would have been an addition to equity. If we had paid out any distributions or dividends, that would have come from the company's equity. It would have been a reduction to equity, just as it would have been a reduction to cash. We see here that neither of them took place, but this is where they would have gone. And then we take the sum of these four line items, and this gives us our new equity. So the company's ending equity balance is what the equity stakeholders have, what the value increase that they have is for the company during that period of time. And in this case, we went from $50,000 to $99,950 exclusively because of the profit that the company posted. So finally, at the end of the course, you'll be asked to put together a review problem. The review problem is important to you. That's the problem that you need to solve in order to receive the certificate for the Introduction to Accounting course. We'll be giving you a case not unlike the Rocky Mountain Catering problem set, but it'll all be one problem set and you'll do it at one time. And that case will give you some initial conditions from which you can create an initial balance sheet. It will also give you a series of transactions from which you can create the first year's income statement. And then subsequently from the initial balance sheet and the transactions you have, you'll be able to put together the year-end balance sheet. Now that you have the two balance sheets and you have the income statement, you'll be able to put together a cash flow statement. And having that statement, you then will be able to have the Statement of Shareholders Equity because you'll have an income statement, balance sheets, and a cash flow statement. So with the Canadice Lake Technologies problem set, again, it will be structured very similarly to Rocky Mountain Catering, but it will be all in one document, all in one problem, rather than broken up into several different problems. Preparing the Rocky Mountain Catering financial statements will help you in preparing the Canadice Lake Technologies review. You should now be prepared to complete the Rocky Mountain Catering Statement of Stakeholders Equity assignment. This is the fifth in a series of assignments to assist you in better understanding the construction of financial statements and prepare you to complete the review problem at the end of the course. My name is Rick Haskell, and I'd like to thank you for watching this video as part of the Bill and Vieve Gore School of Business's Business Certificate Series. I'm a finance professor in the business school, where I'm also the director for the college's Center for Financial Wellness. The Business Certificate Series is offered through the Center as part of our outreach through the Gore School of Business. You can follow us on social media through Westminster's Instagram, YouTube, LinkedIn, or Facebook pages. You can use the QR codes provided or simply go to these websites. Thank you.